Hi there and welcome to this webinar, The Hidden Benefits of Profit Recovery by PRGX. In organisations today, senior finance executives face an ongoing and considerable task: root out the cause of financial leakage and bring value back to their organisation's bottom line. A proven way to deliver this value is through implementing an accounts payable recovery audit program, an essential tool for profit recovery and to increase working capital. Audits not only yield cash, they provide insights and analysis to avoid future issues and leakage before they occur. In this webinar, we will discuss why these audits are vital to boost your bottom line, ways to overcome common challenges, the optimal time to audit, and key steps for organisations to take when implementing an audit strategy to achieve continued success. So before we get started, I'll cover off some housekeeping items. So firstly, if you have any questions as we move through the webinar, please submit these using the question box and we'll address them at the end. Please also check your audio, and if you're having trouble hearing us, let us know in the question box also. And lastly, be sure to follow us on our social channels, LinkedIn and Twitter, to get updates on our upcoming webinars and to also access our on-demand webinars. So to get started, I'd like to introduce both of our speakers today. Pete is our VP of Business Development. He has worked in the recovery audit industry for over 10 years, and prior to joining PRGX in 2009, he spent the first 29 years of his career in finance and accounting, which included executive leadership roles. Zach is our Director of Product Management here at PRGX. Zach is a recovery audit professional with over 11 years of experience in the recovery audit industry. He spent the first 9 years in his career in audit operations with clients from a broad range of industries, starting as an auditor and working his way up in the PRGX organisation to managing audit engagements. So at this time, I'll now hand over to Pete and Zach.
Thank you, Ashley, and welcome everyone. I hope everyone's doing well and keeping safe during these unprecedented times. Our agenda today will focus on 4 key topics. Our first topic considers the principal causes of financial leakage in the source-to-pay process and how that can impact the accounts payable process and organization. Next, we'll present the benefits, the challenges, and the return on investment factors to consider when taking on a third-party accounts payable recovery audit initiative. Then we'll look at some key considerations for implementing an audit. More specific to that, when is the optimal time to audit? Next, we'll examine best practices to ensure a successful recovery audit program. And then lastly, we'll wrap things up with some key takeaways. So let me start off with the fact that financial leakage occurs in every organization, as illustrated by the leaky pipe here on the slide, with your suppliers represented to the left of the pipe and your buyers to the right. And as demonstrated by the leakage points, as much as 5 to 10% of value may be lost due to system and process errors that go undetected and negatively impact your bottom line. Some common contributors to leakage that you may recognize within your own organization include supply chain complexity, as your global supply chain increasingly grows through a robust network of connections, including manufacturers, distributors, wholesalers, and freight forwarders. Then there's that source-to-pay complexity. I don't think any of us have ever walked down the hall of a large company and seen a sign on the door saying source-to-pay department. With globalization, consolidation, and combinations of centralized and decentralized process, we work in an inherently complex space that increase the risk of leakage. Also, where complex supply chains lead to system and data proliferation. That, coupled with disparate systems across the organization, just totally creates an environment for greater risk of leakage within your source-to-pay. And finally, an imbalance between technology innovation and controls, where your changes and change management can't keep up with the pace of the phenomenal level of innovation we're seeing in technology. So basically, by the time you identify and plug a particular gap in your source-to-pay leakage, unbeknownst to you, several more have emerged. All of these factors and more have a direct impact on accounts payable processing controls and increase the level of risk for leakage and lost profits. Common errors such as missed discounts, duplicate payments, under deductions can mean millions of dollars in hidden profit. And although the complexity will only increase, demanding more effort tomorrow, this never-ending cycle is so why many organizations turn to us to help uncover the value in source-to-pay processes that even the most sophisticated ERP solutions couldn't get to before. So what are the benefits of taking on an AP recovery audit program? Reflecting back to the financial leakage slide I just went over, what again is important for finance leaders to understand is that leaks do happen, even in organizations with the most formalized processes. And while an AP recovery audit is obviously designed to recover lost profit, our clients recognize that there is much more that can be gained from the program. Of equal importance, they understand the future cash value impact of identifying those systemic issues causing a leakage to occur in the first place, and then adopting our recommendations for improvement in order to prevent future leakage. So let me share an example. At one of our Fortune 100 manufacturing clients, we identified a large number of payment errors originating from their evaluated receipt settlement process, or ERS process. As I'm sure most of you are aware, ERS is a purchase process that doesn't require an invoice from the supplier for the purchase of goods or services. Rather, the supplier is paid based on the actual quantity of goods received at the loading dock, and paying the supplier based on the quantity received and reliance that the ERP system is accurate with regard to the latest negotiated price with that supplier. In the case of this manufacturing client, we ran various algorithms against their ERS transactional data and uncovered a number of pricing errors and count errors of quantities received. And then we were able to uncover at a couple locations that their documented ERS procedures weren't even being followed or adhered to. We were not only able to recover the money from their suppliers that was due, but of equal value, identify the root cause of the leakage, which in this case was their ERS process, and provide best practice recommendations for resolving the issues. Next, let's dive into some of the basic return on investment factors, which really blend into what the benefits I just spoke about. Well, what are some of those ROI factors you'll want to consider when engaging in a program like this? First of all, recovery of cash from an external AP audit program is pure profit after contingency fees. So maximizing the amount of cash recovered is obvious a key ROI factor, but again, of equal importance, minimizing your team's resources and time required to support this program is also of the utmost importance. For these reasons alone, you want to engage with a recovery audit partnering who offers advanced audit technologies with cutting-edge algorithms and functionality designed to accelerate the claims to recovery process. And of equal importance, skilled and experienced auditors who understand the complexities and the idiosyncrasies, if you will, of the source-to-pay cycle. Next, when considering a global audit program, it's imperative that you work with an audit firm that offers local resources at the enterprise, region, and country levels of your organization, who's able to deliver the service effectively on a global scale with sensitivity to those local customs, regulations, and as important, an effective means of dealing with local suppliers to safeguard against supplier abrasion. Next, as a best practice, AP recovery audits should really be adopted as an ongoing process for continuing improvement not just a one-and-done project. With an ever-changing source-to-pay cycle that I alluded to earlier, impacted by system updates, acquisitions, employee turnover, regional expansion, and the like, a recovery audit will serve to keep source-to-pay processes in check and identify non-compliance issues when they occur. For this reason, more and more companies are engaging on ongoing rolling audit programs. And in many cases, many of our clients have transitioned to an audit process from recovery to more preventive methods by auditing closer to the transaction. Another key factor you'll want to consider is the risk of supplier abrasion. As I think we've all maybe witnessed in engaging in one of these projects, issuing false claims to suppliers is a common malpractice of some AP recovery audit firms who lack the skill set and professional courtesy of working with suppliers on the client's behalf. Here at PRGX, one of the many ways we safeguard against supplier abrasion is that we adhere to a quality assurance program where all claims for recovery are well vetted and documented and 100% reviewed by the audit supervisor before any outreach is made to your supplier. And finally, from an ROI perspective, given the fact that AP recovery audits are contingency-based, a budget isn't required, and a cash recovery can serve as a self-funding mechanism for investing in other projects. In addition, an AP recovery audit is broadly viewed as the tip of the spear. What I mean by that, as far as tip of the spear, it's shining a light on other source-to-pay compliance issues and then expanding scope to include such things as contract compliance reviews, pricing reviews, maybe payment term non-compliance reviews, and possibly even moving forward with a project to optimize DPO. All for the benefit of improving the source-to-pay process and exponentially increasing project ROI and driving bottom-line savings. So let's move over to some common challenges that we hear from finance leaders when considering an AP recovery audit. The first has to do with misalignment of priorities between management levels, and in some cases where middle management feels threatened by the findings of the program. Whereas top management wants the cash recoveries and the audit insights to help them improve their process. So getting buy-in from all key stakeholders is a critical path for success. In most cases, non-compliance and recoveries end up being less than 0.1% of annual spend, which in terms of dollars translates to around $1 million of recovery savings for every $1 billion in spend, or AP volume. Meaning that on average, 99.9% of what the organization is processing as far as invoices and purchase orders and the such is compliant. 99.9% is compliant. So I guess what I'm saying is there really shouldn't be any apprehension about audit results. It's all about volume, and that's the degree of where we find noncompliance because it's so voluminous. Another concern we hear quite often is the level of resources and time committed to the project. However, many organizations simply overestimate the time and people required to conduct the audit. There is limited time involved. However, for the most part, we operate independently once we have access to the data. On the next point, I spoke to this earlier about the concern for supplier abrasion. This can become a reality if you choose a firm that lacks the necessary audit process and safeguards designed to protect supplier relationships. And of course, as suppliers being your major partners, you'll want to protect those interests by all means. As it relates to global or multi-regional AP recovery audit programs, A common challenge we find is ensuring that the audit process and reporting is consistent across all regions. As I mentioned to you earlier, working with a third-party audit firm that is truly global, that offers a broad international footprint and global governance model is of the utmost importance when it comes down to delivering a high-quality, effective, and efficient global recovery audit program. Otherwise, your audit program will likely turn out to be ineffective and risk a high degree of internal and supplier animosity. Understanding an internal audit program can be challenging, to say the least. We've had clients that, they took a shot at bringing their audit in-house. Some even is going as far as purchasing self-audit software. However, they soon came to realization they underestimated the time and the resources it takes to effectively carry out an audit internally, whether that be on the transactional side of audit and ERP, or whether that be a full-blown statement audit. And eventually they came back to PRGX for help. Our clients view us as a seamless extension to their AP organization, acting transparently and independently, but in partnership to their day-to-day function. Another common issue we hear from prospects is, how do we prevent future payment errors? There's some AP recovery audit firms that only focus on recovery savings. Really, they lack in the S2P knowledge to properly identify process gaps, or that, for that matter, provide recommendations for improvement to prevent the future leakage that you want to prevent. As I stated earlier, maximizing recovery savings, identifying the root cause, and providing recommendations for improvement, we believe, should be yours and your audit firm's key objectives. So Zach, I'll go ahead and turn it over to you. I guess what the question is, when is the optimal time to audit?
Perfect. Yeah, thanks, Pete. And the short answer is there's never really a bad time to start an audit. The sooner you start the audit, the sooner we start recovering dollars and understanding where those dollars are coming from or where that financial leakage is within the organization. So the short answer to that is there never is a bad time to start an audit. That said, there are some things that we look for or we keep an eye out for to identify as those areas that may cause us to increase the priority when considering timing for a recovery audit, or may require a recovery audit, an accounts payable recovery audit to be escalated in terms of an organization's objectives and goals for any given time period. So some of those things would be things like known vulnerabilities in the S2P process. So if an organization is looking within and understands that there are some issues that they have related to the S2P process, say issues with pricing during a manufacturing cycle, or issues with return product or duplicate payments, those types of things may cause an organization to, again, escalate executing that recovery audit. Another item that we would consider or recommend that would be cause for escalation of the timing of a recovery audit would be multiple AP systems or multiple ERPs as part of an organization's complexity. So if you're considering an acquisition or potentially a divestiture or something else that causes the number of ERPs to increase, that's going to create additional risk and opportunities for leakage. And of course, that would then be a great time to leverage your recovery audit as a means, again, of identifying those leakage points, working to correct them, but also starting to recover the cash that may be going out the door as a result of that leakage. Pete touched on the global complexity piece of this, as well as being another maybe a key item to look to when considering the timing of a recovery audit. A good recovery audit provider will lay out a program for when it makes sense to incorporate various regions as an organization into the recovery audit process, and as Pete touched on already, have a seamless process so that no matter where the audit is being performed, the process looks the same, but the local audit teams are able to adjust to local nuances and things of that nature. And the last piece of this that we look at is to consider a recovery audit as a source of funding. Pete touched on this as well, but it's definitely a consideration when you consider the timing of a recovery audit. As the organization looks to kind of strategic planning for future initiatives, one of the things that of course is considered then is the funding for those initiatives, and the dollars that go out the door as part of leakage that can be recovered through a recovery audit can ultimately be used potentially as a source of funding for that objective or initiative. So those are some of the things that we look at in terms of the timing of a recovery audit and what might cause it to climb the priority ladder. Let's take a look now at what we would consider to be some of the best practices for a successful recovery audit program. And a lot of these best practices are going to have a corresponding ROI factor or potentially be the result of a corresponding challenge, which Pete has already touched on. But let's work through these next. So the first thing that we've got listed out under the best practices is establishing program governance. And this is critical when we engage with clients or when clients are engaged as part of a recovery audit. Establishing internal roles as well as the responsibilities associated with those roles. It's not uncommon that a decision will have to be made or an item will need to be escalated, whether it be the extract of data or an issue with a particular supplier, and knowing who within a client organization we can reach to or a recovery audit firm could reach to get a resolution on that can help mitigate the bottleneck of decisions that ultimately delay recovery and delay the ability to analyze trends on that recovery and ultimately provide those recommendations to mitigate the leakage that we've talked about thus far. The next best practice we have is reinforcing the program goals and objectives. The focus here again is on recovery and process improvement, and Pete talked about this as one of the challenges. So one of the things that we see in some organizations is this concern over whose fault a particular leakage point is, and not a focus on the fact that now, through the engagement of a recovery audit firm, those dollars are coming back in the door, and we've identified what that leakage point is. Sometimes it's not necessarily known, but again, the focus is on fault and not on getting the dollars back in and improving the process to mitigate that leakage going forward. So reinforcing this is key to a successful recovery audit program. Two things that go hand in hand with those two items, the governance and then the program goals, are the buy-in. So having buy-in from key stakeholders is key to and goes hand in hand with those other 2 points in terms of creating a successful program when engaging a recovery audit firm. Pete touched on one point, and this goes along the lines of our long-term strategic plan. Recovery audit should be looked at as a continuous process, not a one and done. Recovery audit, as Pete mentioned, is identifying those historical transactions sort of at its core, identifying why they happen and how we prevent them from happening going forward. But that feedback is only as current as the data that's been provided that's ultimately being audited. So what we see as a trend across kind of the recovery audit industry, if you will, is that time creeping closer and closer to current and starting to entertain sort of a preventative mindset. So now we have this feedback from these recoverable items that is more real time. It's closer to the transaction, and the value and the ability to mitigate those leakage points is real time. It's a transaction that happened a month ago or 6 weeks or 2 months ago, as opposed to a transaction that happened maybe a calendar year ago and may no longer have as much relevance as it does for a real-time transaction. And of course, then if we extend that to preventative, the value that's gained as a result of that increases that much more. The last piece of this then, from a best practice standpoint, is understanding the third-party role. As you engage an outside organization to be the one that administers this recovery audit program for you and is aiding in this process, managing expectations becomes extremely critical, both internally within the organization, and we kind of touched on that with program governance and the reinforcement of goals and objectives, but also with the vendor or supplier base, helping them understand the role of a recovery audit firm such as PRGX is critical in helping manage their willingness to respond to requests for information and ultimately identify those areas where leakage has occurred and get those dollars back. So it's not uncommon for a client, or what we would recommend for our clients as a best practice is to communicate with that vendor base and make them aware of the ongoing program. A lot will be familiar with larger recovery audit firms, but to reinforce that expectation with the supplier base to cooperate and communicate with the recovery audit firm can be critical as a best practice for success in the recovery audit program. So what do we want to take away from today's kind of brief webinar, if you will? What are our key takeaways? And I just want to put a little bit of a bow on this. That the audit yield insights are the identification of those systemic errors and the ability to then address those issues, prevent that future leakage, right? That's the big takeaway. Getting the dollars back is great and has its own benefits, but being able to mitigate those things from happening going forward is the other half of that value equation, and Pete touched on that. The recovery audit program, if administered correctly and executed with the right partner, can be a low-touch and very high-reward exercise. That's obviously significant ROI. So if you've got an audit firm that you trust to run independent of your organization, but work in your organization's best interest, again, we maximize the amount of reward while minimizing the amount of touch from our client partners. The exercise in continuous improvement, again, just want to reinforce the point that recovery audit should be viewed as not a one-and-done type scenario, but rather an ongoing item. And as Pete touched on, recovery audit firms should be viewed as a sort of a strategic partner in helping execute those organizational initiatives, but also helping our clients kind of navigate as they move forward, as their organization changes shape over time, as new complexity is introduced. Your recovery audit partner should be able to react with you as an extension of that organization. And kind of going hand in hand with the low-touch, high-reward exercise, it's really a no-regret scenario. It's a contingency fee model, as Pete touched on briefly. So unless dollars are recovered, there's really no dollars out the door. While there is a little bit of time, it's very small in consideration of the larger picture. It's really a business best practice at this point in time. Most large organizations have either done an audit, are currently engaged in an audit, or are certainly at a minimum considering an audit. And then, of course, engaging with the right partner is critical to the success of the program. And the last piece of this that's really a key takeaway is we're kind of talking about this with accounts payable as the main focus of recovery audit, but certainly there are areas of opportunity for cash recovery outside of accounts payable. And in a lot of cases, those recoverable areas show themselves in an accounts payable recovery audit. You know, accounts payable is responsible for ultimately paying all those transactions. And so we see these other areas, these opportunities for, let's say, pricing, which may be handled by the procurement department, or rebates, which may be tracked again by procurement, or logistical issues handled by logistics. These things appear in an accounts payable recovery audit, but don't necessarily fall directly into the primary function of accounts payable. And so there's these opportunities for cash recovery in other areas that make themselves known in an accounts payable recovery audit. So executing an audit or having an ongoing audit and having these issues pop up is sort of a window into where there may be other opportunity to explore and potentially engage in some other type of audit with your recovery audit provider. So that's the end of the prepared content that we have for today. At this time, I'm going to turn it back over to Ashley for any questions.
Great, thanks, Zach. So it looks like we've had three really good questions come in today. The first is around data acquisition. So what approach does PRGX take to acquire data prior to an audit?
Yeah, good question, Ashley. I can jump in on that one. So PRGX is extremely familiar with large ERP systems, your SAP, JD Edwards, Oracle, others, and are extremely familiar with both the data structure of those types of ERPs, but also what's required to get data from those ERPs and ultimately to PRGX. So we typically recommend a script-based approach. So for anyone that's on the call that's maybe familiar with data and data scripts, our data services group will provide scripts for your ERP system. We would typically engage in a specific call with a with a client's IT team to have sort of a light conversation between the data-specific groups. There may be some subtle tweaks that need to be made to the scripts. Those are generally minor, and once they're approved, the data extraction process can begin. And again, generally that's something that would run overnight, and so it wouldn't have an impact on resources. It just requires some processing time. The other half of that question is, how does the data get to PRGX? And we would typically recommend a secure file transfer protocol or an SFTP to submit that data to PRGX, of which we would manage. That said, we're certainly flexible and can probably flex to meet an organization's needs if those two things cannot be accomplished. But that's what we would generally recommend.
Great, thank you. So the second question follows on from this one. So after PRGX receives the data, what is involved from the client in terms of resources as you go through the audit process?
Well, I can jump in on that one as well, Ashley. So from a client resource standpoint, again, assuming we've established kind of roles and responsibilities, what we typically see after data has been received is kind of a bi-weekly touch point, what we would recommend for our clients that are new, and that would be 30 minutes, potentially up to an hour, especially for the first couple meetings as the audit gets underway and your audit firm or PRGX begins to execute the work that is the recovery audit. On a call like that, we would probably talk about how the audit's progressing, what type of responses we're starting to receive from vendors or suppliers, if recoveries are being generated in those initial calls, and then over time we would talk about recovery trends, start to share some of that feedback about where the leakage points are and how we can start to mitigate those. So you're not waiting till the end of an audit, to get some type of formal report to outline everything. You're getting that feedback along the way and can take action as soon as is reasonable for the organization. So we typically see about 30 minutes to an hour every other week, and then we have the claim processing, which also requires some resources. Generally, that's not significant, and PRGX is willing to sort of take ownership of that claim process to the extent our clients would allow us to, with the one exception of entering, let's say, a recoverable item to the client ERP. Of course, the client would need to do that, but there are ways for us to bring some efficiency to that part of the process as well.
Great, thank you. And lastly, what are the key metrics and insights tracked throughout an audit, and how are they communicated back to the client?
Yeah, Zach, I'll take that one. Thanks, Ash. That's another great question. So first of all, let me just start off in response that, transparency throughout the audit process is paramount. Not only in terms of the claim status, where we're at in claims, whether they're open, closed, recovered, but also in sharing areas where potential process gaps have been identified. That needs to happen throughout the engagement. So really what I'm getting to is there should be no surprises learned at the end of the engagement. So that's, I think, number one as far as, sharing key insights. The way metrics are tracked and insights and potential process gaps are recorded, that's really on an ongoing basis. And we have two methods for doing that. One is through our client-facing claim management solution. It's a web-based tool that the client uses to identify, validate, and approve claims. And there's a lot of reporting on that. So you can dial a claim down to such things as supplier. You can look at them by claim type, which to us would be the root cause of what caused that payment error to occur. So they can look at it in that fashion. And then in addition to the claim management system, what we do here is we establish either weekly or bi-weekly project status meetings. And, typically they're a half hour to an hour meeting. I kind of refer to them as State of the Union. Where are we at the project, how are we doing against our timeline. But I think of equity to that meeting is sharing other topics as far as, executive overview of our recovered funds and some of the open claims that we might be having challenges with, or we just need to seek the client's guidance on some claims. And then in addition to that, on those calls we can share the insights of where we're seeing potential process gaps or control gaps, and immediately come back with some recommendations as we progress through this project. And then in addition to those, things that you would get naturally in an AP recovery audit as far as claims detailed matrix, there's other ones that can be provided, such things as reporting on potential vendor duplicates, where there might be missing potholes, if you will, in supplier data, in certain data elements, regard to addresses, contact information, etc. And then even go as far as some metrics around days payable outstanding, or DPO. So hopefully that answered the question. That's basically what we do with regard to metrics and insight.
Great, thank you. So a big thank you to both of our speakers, Pete and Zach, today, and taking the time to answer these questions. You both provided some really good insight into some of the hidden benefits of profit recovery and around implementing a recovery audit program. So we want to thank you all for listening in on today's webinar. This recording will be added to the PRGX website along with our other on-demand webinars, which will also be available to view. Plus, we have other webinars throughout May and June, so make sure you keep an eye out for those also. And if you'd like to know more or speak with a PRGX expert, please visit prgx.com or get in touch with us by email at marketing@prgx.com. Thank you again for joining us today.
Thank you, everyone.
Thank you, everyone.